Joins NASCA's BTC price and more is Bruno Ramos de Sousa. He's the head of U.S. and new markets at crypto asset manager Hashdex. Bruno, great to have you on the show. So let's start off with the current market conditions. You know, at the beginning of the month, it looked like risk was still on the table. Are you getting a different reading heading into March?
Yes, very different. Christina, pleasure to be here again. I think more than the macro factors, which certainly play a big part in this, our feeling and also being on the street and talking to investors, there was still a lot of fear from FTX contagion, especially on the Genesis side and what could happen to Genesis, GBTC, and so on and so forth, the whole DCG issue. That's something that, we saw on Twitter rumors that, GBTC could be blown up and things like that. So that got to investors. Everybody that was, somewhat interested in Bitcoin was afraid that there was going to be a big number of Bitcoins put back into the market. So that's something that everybody was waiting for. And then once that situation sort of not solved itself, but there was a path forward that we're seeing today with Chapter 11, I think that took some pressure and some fear from those investors. And these things, of course, they come in combination. So that's our impression, and that's what we've been hearing from institutional investors, especially.
So my understanding is you're seeing the market bottoming out. And what are you hearing from institutional investors compared to retail investors?
Yeah, institutional investors are interesting because they're very educated in the sector, and they're looking for interesting windows to come in. And what we've been hearing, which is very different from what you had in early January, December, and November, is that potentially now it's an interesting window to come in or come back in. So this is very interesting. Remember, these were hedge funds, family offices, people very concerned with bottoms and ups. So we potentially are in a different stage right now in which it opens up the gate for an interesting semester and flows in that sense.
All right. Do you have a sense of and how retail investment is going?
Retail is slow. It's very, very slow in these past few months. We can see this from our ETFs. So we manage ETFs in different countries. You can see the data, what's coming from retail, what's coming from institutional. And that's normal. Retail, of course, moves very fast when prices are really coming up very fast. But when you're trading sideways or if the movement's not so high, normally they lag a little bit behind. So it's still slow. There's people still scared. So I'd say there's more redemptions, actually, still a little bit of redemptions on the retail side.
Let's zoom in into Bitcoin. Are we in a bear market rally or something more sustainable for Bitcoin?
We believe we're in the recovery phase already. I think we're past the bottom. Hopefully, everything that was putting more pressure last year after FTX and macro factors in general, I think that's changed. So it mimics a little bit what happened in 2018-19 if you look at the charts. And we see this year potentially not having incredible increases in the levels that we're seeing today. Lots of ups and downs, but certainly a more positive year in total returns than we had last year. So that's the expectation. Hopefully the worst is behind us already.
You're also seeing a catalyst for Bitcoin in terms of the next bull market cycle due to the halving in 2024. What can you say about that?
Yeah, I think the last cycle was a moment in which different investors became aware of the concept of the halving, what it meant, and people saw what happened with the price before and after, but especially before we saw that movement. So it's a narrative that's coming back again. We don't have to explain it much because people had the time to do their homework last time. So this is definitely coming back to the discussion, which shows, again, some normality to the sector. If we're talking again about halving, it means that we don't have to deal with very specific critical crypto things. I'd say one thing that is drawing attention from us, not so much from investors, but from us, is the path, the regulation or regulatory actions we're taking, especially in the U.S. This is different from what we saw in previous months and previous years. And there is something to be said that, maybe regulators are overreaching on some things as a result of what happened with FTX.
I just want to backtrack a bit into Bitcoin. What level do you see support at, and what resistance level are you looking at as a breakthrough?
So that's always, always the hard questions. Since it was that level of 17, 18 that we were trading for a few months, that's always something we should pay a lot of attention to. Luckily, even in the hardest times, it held on around that, dropping a little bit below, but coming back to that. So that's one to watch. And on the upper levels, 25, 26, if it breaks beyond that, then it's an interesting path forward. So if it stays within the range, we'll probably within normality and in the next couple of months. If it goes above and beyond that, then we might have some interesting months ahead.
You mentioned regulation headwinds. So in the United States, we're seeing the SEC dole out of several enforcement actions, claiming a lot of different cryptocurrencies are in fact unregistered securities. It seems that in Asia, we've been reporting here at CoinDesk, especially one of our directors, Emily Parker, has been saying that they're actually looking to expand and potentially create more friendly crypto rules, although very, very slowly. But I wonder, what do you foresee in terms of regulation headwinds?
Yeah, I think in that sense, the U.S. has in the past few years taken a strange path around crypto regulation. It's not, I'd say the country is not being pragmatic enough around some specific issues. And we're seeing the level of pragmatism when you look at Hong Kong, which is a good example of some things coming up. Also, the UK, the way the FCA is looking at the market, especially in specific European dynamics, some things in Brussels being a bit slow, and the UK seeing a real chance to be the leader in the continent. So a very pragmatic approach in terms of having the basic rules and guidelines for investment protection, but acknowledging this is an important sector and this should be fostered, and this is an essential tech development that will continue to be there. What we're seeing in the U.S. And what has been increased in the past few weeks and months is really regulation by enforcement and a lack of clarity for projects. So we've been hearing from the SEC for a long time, investors, crypto projects come to us and come to us and come to us. But, right now what we have is essentially Chairman Gensler saying in these past days that essentially any tokens of security except for Bitcoin, but not really pointing a path forward. If we're looking at precedents of things that happen in other tokens, what are we talking about? Are these big fines for projects? Is this delisting? Is this more is a deeper thing? So that creates a lot of instability for the whole ecosystem, because if you look at an exchange, they will be very scared to be trading potential securities, right? So I think the background of that is still the turf war between the SEC and the CFTC. So the faster federal legislation comes to really solve who's the regulator in charge of the market, and that specific gray zone of what a security is and what's not a security, the better it will be for the U.S. market in crypto. If the U.S. doesn't solve that, other countries will take that space, right?
All right, Bruno, we got to end there, but thank you for joining us. That was Hashdex Head of U.S. New Markets, Bruno Ramos de Sousa.